If you've ever heard Dave Ramsey call whole life insurance a scam and you believed him, I want you to watch this whole video before you decide he's right. Hey, I'm Daniel. I'm a dad and I run a business here in Tennessee. And I've written policies for my own kids using the exact strategy I'm about to explain. So this isn't theory for me. I use it. Let's just say it out loud. You've probably heard someone, maybe Dave Ramsey, maybe a coworker who listens to him. They'll say whole life insurance is a ripoff. Buy term, invest the difference, they say. It's catchy and it sounds disciplined, and I get why it's the default advice that a lot of people repeat without ever actually breaking it down. But here's what that advice doesn't tell you. Term insurance is temporary, and that's not a criticism. It's just what it's built to do. You pay a premium for 15 to 20 or 30 years, and if you're still alive when the term ends, the policy is gone. No cash value, no refund. You paid for coverage, you used it exactly as designed, and now you own nothing. Now, think about Jonathan for a second. He's 34 years old, he runs a small roofing crew with 4 guys on payroll and 2 kids at home. He bought term 15 years ago because that's what he was told to do, and he's paid on it faithfully. And if you asked him right now, what do you have to show for that? The honest answer is nothing. Not because he did anything wrong, because that's literally how the product is designed to work. But that's fine, the argument goes, because you invested the difference. Here's the part that doesn't get said enough. That only works if you actually consistently, without fail, invest that difference every single month for decades, and you never touch it. Be honest with yourself. How many people do you know who've actually done that uninterrupted for 20 years? See, I'm not telling you that term is evil. I'm telling you it's incomplete advice when it's presented as the only smart option. Whole life insurance works differently. Part of your premium builds cash value, real guaranteed to grow money inside the policy that belongs to you that you can have access to while you're alive, and it doesn't disappear if you outlive the term. And that death benefit doesn't expire at age 65 or 70. It's there for your family regardless of when something happens. Is it more expensive per dollar of coverage than term? Yes. Nobody's pretending otherwise. But more expensive and a scam are not the same thing. A scam takes your money and gives you nothing. This gives you a permanent asset, cash you can access, and coverage that doesn't have an expiration date. So why does the "it's a scam" message spread so fast? Well, it's because it's simple, it's confident, and aimed at a general audience, not specifically at a business owner with a family and a company that depends on him staying alive and capitalized. What's smart for a 25-year-old renter with no dependents isn't automatically smart for a 34-year-old with a crew, a payroll, and 2 kids counting on him. Here's the real question underneath all of this, and it's the one nobody wants to sit with. It's not really about whether whole life is worth it on a spreadsheet. It's about what actually happens to your family and your business if you're not here tomorrow. Have you actually thought that through? Not the insurance part, the real part. Who runs the crew? Who pays the mortgage? What does your kid's life look like? And that's what we're breaking down next. In the next video, I want to walk through exactly what happens to a business owner's family in the first 30 days after he's gone. Because most guys have never actually mapped that out, and it changes how you think about this.